Focus to the macro outlook and what's happening in Asia Pacific, India, Africa, Middle East and Russia. And I'm joined by our next guest, Peter McGuire from XM. Peter, good afternoon.
Good afternoon, Danielle.
Thank you so much for joining us this afternoon.
Oh, well, it's lovely to be here.
Yes, so my gosh, as I was just saying to the previous guest, we are living in very interesting times at the moment. No more so than the events that took hold over the weekend, which now seem to be, well, I don't know, was it nothing or was it something very substantial?
Gee, I tell you what, the jury's out on that one, and it's still a state of confusion to most analysts out there, and certainly to Main Street. They're not really sure what they experienced, what they saw, and what the impact's going to be longer term or over the next couple of months. So let alone where we are this time next year with a situation like this. So the markets more or less, but the other side of it, of course, is the markets more or less shrugged it off. There's been no real impact. We haven't seen bond prices go crazy. We haven't seen energy prices, gold, safe haven, any of that, nor really much movement in stock markets globally in the sense of, meltdowns or anything.
Yeah, absolutely. It's sort of turned into a bit of a nothing sandwich, but I'm sure some of the generals that were involved in it mightn't be thinking it was a nothing sandwich in a couple of weeks, but we'll have to wait and see whether Putin's revenge comes forth. But just generally in terms of the markets, what's going on with Japan and the yen? Because you're continuing to see really the yen being put under so much pressure with a much more, I suppose, hawkish, Fed and much higher interest rates in the US.
Well, exactly, the divergence between, the Japanese interest rates and certainly what we've got in the States and Eurozone. So there's the first part. The second part is you're about 143.40. It's had a dramatic move to the upside and monstrous moves really since September of last year, from those lows all the way to the highs of intervention, and then crashed back down again. And now you're back at 143, 144 level. There's no doubt that probably you'll see some form of intervention from the Bank of Japan. I would say maybe this week, but I would think next week if it continues its uptick. And then the second part is there just doesn't seem any point as far as lift off as far as rhetoric with rates and the rate cycle from Japan. So you've got a stock market that's performed incredibly well. You've got a yen that's come under big pressure and massive pressure against the likes of the pound, also against the euro. So that needs to be really taken into consideration. But it's been a dynamic trade to trade, and I'm looking forward to it keep on going.
It'd be quite huge, wouldn't it, to actually see the Bank of Japan move away from that very dovish stance? I mean, it would. Do you think it'd be market-moving events? Because, they do hold lots of US treasuries and, they're just the dynamics of what would go on between carry trades and things.
Well, exactly right. So there's the first part, of course, Mrs. Watanabe and the carry trade. So I'm sure that the retail traders across Japan and Asia are loving the dynamic moves. And the next part is, I won't be surprised over the summer period that you see some action coming from the Bank of Japan. But at the moment, we've just got to sit here and just observe it and see where it all trades. But it's causing much concern. And when you've got, the likes of last week with the Bank of England knocking it up another 50 basis points, the Fed talk and where we are over the next couple of months, there's going to be even more pressure, I think, on dollar versus yen.
Yeah, absolutely. And let's have a look at the S&P 500 because, when we think back to October last year and everybody was, down and out, so to speak, and this 2023 has really surprised a lot of people.
It's been incredible. The first 6 months in is just nothing short of, mind-blowing, really, considering where we were and where we are now. And it's knocking on the door of, probably the 4,500 sometime in July. And there's the upside. There's still a little bit of, I think, fear of missing out. If you're not in the market, I think it's starting to chase it. And from a retail perspective, they seem to be, jumping in and enjoying the uptick, certainly amongst, some of those big NASDAQ shareholders or that make up the composite. But the overall theme, I think, Danielle, is, a summer rally, and you're pretty hard to get in the way of a bull market, isn't it?
Well, indeed, a lot of shorters have been very burnt this time around. And of
Oh, yeah.
course, the more that we've had, interestingly enough, a more hawkish Fed, gold not performing. So maybe we can pull up that gold chart that we have. There we go. I mean, when you look at it that way, it looks like just the tiniest correction, doesn't it, Peter, in
Well,
terms of the
that's that was the US 500. So
Oh,
yeah, it
sorry,
did.
wrong chart. Can we have the gold chart?
Get the right chart. We'll get someone up there with the right chart. But gold has certainly given back some of its profit taking, and there's no doubting that it was a high of nearly 2,070 odd. It's back there at the moment, 1938. It's a lot of that hot steam's come out of it. There, people, I think, have chased other markets in the short run. There's been a lot of excitement across US equities, continuing as far as the bond rates. And the overall, I think currency trades have been very dynamic in the last couple of weeks. So there's been other money, smart money's hunted those sort of targets. But I think gold will come back, and gold will come back strong. Just give it a bit of time, Danielle, because I think its best days are ahead of it.
Absolutely, and always these periods of weakness are usually a good time to go and accumulate.
Yeah, very much so.